So last week began with optimism as the S&P 500 crossed the 6,500 mark for the very first time in history on Thursday, securing its 20th record close of 2025. The Dow and Nasdaq also notched new highs, buoyed by a combination of strong earnings reports and the expectations of a dovish Federal Reserve stance following Chair Powell's remarks in Jackson Hole. The S&P 500 dropped 0.6%, while the Dow dropped 0.2% and the Nasdaq slid by over 1%, erasing much of the midweek gains as investors took profits. Whenever you're heading into a holiday, the volume in the stock market tends to dwindle, and with notable losses from Dell, Marvell, and even Nvidia, which saw its first monthly drop since early spring. Sector-wise, though, technology grabbed headlines early in the week, energizing the rally thanks to enthusiasm surrounding artificial intelligence and robust earnings, which I will tell you more about on the September CB3 live show a week from Thursday. By week's end, a visible rotation was underway with energy and defensive stocks showing resilience while tech gave back some ground. Meanwhile, gold broke a 3-week slump to close at a record 3,473, and the yield on the 10-year treasuries ticked higher after trending down earlier. We're going to see 1 or 2 and possibly 3 rate cuts before New Year's Eve. August as a whole closed with strong gains. Remember that August is usually the second weakest month right after September, so that's a positive with August closing with strong gains. Have to cut in September. Friday's retreat highlighted the market's sensitivity to sector rotations and profit-taking after a sustained rally, as well as jitters over politically charged news around the Federal Reserve and changes in the U.S. tariff rules. We still have tariff tantrums playing out in the market. So let's look ahead to September's challenges. Don't miss the monthly show where we'll talk about all of this in greater detail. Thanks for listening. See you next time.